Hi, I'm Ross Maynard. Welcome to the Accountant's Guide to Climate Change, short version. This guide is aimed at accountants who are wondering how climate change may affect the organisations that they support and how the accountant may play a role in that. So in the full course, I cover a range of topics related to climate change and show how accountants can play a part in that. In this short version, we just cover one of those topics as a taster for the full course. So let's get started. And the first thing to say is that I was surprised when I was researching this course how big the impacts of climate change have been already. Climate change is very real, and it's happening now. For example, the global annual temperature has increased at an average rate of 0.07 centigrade per decade since 1880, and at over twice that rate, 0.18 centigrade, since 1981, and as you can see on the chart there, the global temperature rise since 1880. And this significant increase in accumulated heat is driving regional and seasonal temperature extremes, reducing snow cover, reducing sea ice intensity, increasing heavy rainfall, and changing habitat ranges for plants and animals. And carbon dioxide levels today are higher than at any point they've been in the last 800,000 years. And one of the consequences of this climate change is that sea levels are rising. Average sea levels have risen around 23 centimetres since 1880, with about 8 centimetres of that gained within the last 25 years. Each year, the sea is rising another 3.2 millimetres, and the rising sea level is mostly due to a combination of meltwater from glaciers and ice sheets and thermal expansion of seawater as it warms. Even if the world follows a low greenhouse gas pathway, global sea levels will likely rise at least 30 centimetres between the year 2000 and the year 2100. With high emissions, a worst-case scenario of 2.5 metres sea level rise beyond the year 2000 level cannot be ruled out. The accountant has a vital role to play in climate change in supporting organisations. So the finance team play a crucial role in the organisation's management team. They are the collectors, analysts and presenters of business data. They are the appraisers of costs, benefits and the feasibility of projects and investments. And they're the managers of cash flow. The accountants play a crucial role in highlighting the likely costs that climate change might bring and the potential benefits that its opportunities present. And just look at this statement from the chief executive of the global accounting bodies of the accounting profession from February 2020. The accountancy profession can play a significant role in achieving both climate change mitigation and adaptation at individual business, industry sector and economy-wide levels. Now, the sources for this information on climate change come from the websites that I've listed below. The NASA Earth Observatory is a very interesting one to look at, and then climate.gov is also very interesting and has lots of information. There's also stuff there from National Geographic. But you can look on any reputable news website and plenty of other scientific websites to find information about climate change. And for an accountant's angle on climate change, look at semaglobal.com and their thought leadership document that's referenced there as well. So let's look at the business trends which are being created by climate change now. The key action trends in climate change are shown on the Climate Actions trend wheel here. And round the outside we see the key issues which climate change is affecting in organisations and which we'll cover in this course. From zero carbon living to the increasing power of people and their values, business as a force for change, people and habitats on the move, climate adaptation and sustainable land use and energy use, the circular economy, new technology solutions, pressures on the supply chains, government policy and regulation, and the ESG, which is environment, social and governance investment boom. And those are all the business trends that are being created as a result of climate change. So the questions for your organization are: what strengths does your organization have in these areas? What are its gaps? What threats do you see as the most pressing for your organization? And what opportunities might there be? And we'll look at those for each of these issues. Some of the key business actions for climate change that can be taken are summarized in this list here. We can anticipate and meet changing shareholder and customer demands. We can work to strengthen investor confidence. We can engage more proactively with the supply chain. We can build resilience into our operations and start to future-proof them. We can demonstrate leadership and enhance reputation. We can reduce the climate impact of our organization. We can increase innovation. We can identify opportunities and mitigate risks. We can improve operational efficiency and deliver cost savings. We can work to protect our revenues, and we can reduce the risk of changing regulations. In this short video, I'm going to look at one impact of climate change on organizations, and that is business as a force for change. Demand is growing around the world for new types of business leadership which are focused on creating long-term value rather than on maximizing short-term profits. And We Mean Business is a global non-profit coalition working with the world's most influential businesses to take action on climate change. And it's made up of these 7 organizations, which are shown in the picture there, and which you can reference their websites very easily on the internet. There are now over 1,200 We Mean Business members, representing $25 trillion in market value committed to climate action. And the website for We Mean Business is shown at the bottom of the screen there. So let's look at some of the examples of business as a force for change. Microsoft has pledged to be carbon negative by 2030 and has created a $1 billion innovation fund. Amazon founder Jeff Bezos has committed $10 billion to fight climate change. Nestlé is investing $1.68 billion in sustainable packaging. Starbucks has announced an aspiration to become resource positive, though of course aspirations need to be followed by actual actions. Nestlé, Enel, Novozymes, Cisco, Osram are all listed in the top 20 sustainability ranking in 2020. Sainsbury's Supermarket here in the UK will invest £1 billion to become net zero by 2040. And it turns out that 93% of the top 250 largest corporations in 49 countries worldwide are now reporting on sustainability. Mark Carney, former governor of the Bank of England and now the United Nations Special Envoy for Climate Action and Finance, said, "A question for every company, every financial institution, every asset manager, pension fund or insurer. What is your plan?" Climate change is creating many opportunities for businesses to act as a force for change. CDP is the not-for-profit charity that runs the global disclosure system for investors, companies, cities, states and regions to record and manage their environmental impacts. CDP estimates that the market for low-carbon goods and services was $5.5 trillion in 2015, and they forecast that $4 trillion worth of assets will be at risk from climate change by 2030. The 2018 report of the Global Commission on the Economy and Climate, the report being called the New Climate Economy, predicts that $90 trillion in infrastructure investment will be required by 2030, which is more than the whole of the current stock of infrastructure, and that low carbon opportunities of up to $26 trillion will be available through to 2030. The New Climate Economy report says that the opportunities are great, but so too is the potential for stranded assets, stranded communities, and stranded workers. The priorities for the new climate economy, therefore, are as follows. The 2018 New Climate Economy Report identifies 4 urgent priorities for governments and for business. Firstly, pricing carbon and moving towards mandatory disclosure of climate-related financial costs as part of a broader policy package, and there have been many recent reports that the accountancy and audit bodies are beginning to move towards climate reporting as part of their annual reporting for organisations. Secondly, accelerating investment in sustainable infrastructure, supported by clear national and regional strategies and programmes. Thirdly, harnessing the power of the private sector, including to unleash innovation and advance supply chain transparency. And fourthly, ensuring a people-centred approach such that the gains are shared equitably and the transition to the new climate economy is just. The challenge for accountants? The opportunities, as we've seen, are out there. Massive investment is required in infrastructure and in business reorganisation to meet the challenge of climate change. But it requires more innovative thinking than simply repeating the approaches and the procedures from the past. All organisations can expect to feel pressure to act across their supply chains to move towards more climate-friendly approaches. And that means that repurposing the old spreadsheets will not work. The standard assumptions for investment appraisal, for example, no longer apply. New models are needed. And finance teams can lead that effort. They need to invest more time and more research into preparing business plans and investment projects for the next decade and beyond. To quote the New Climate Economy Report again, leaders are already seizing the exciting economic and market opportunities of the new growth approach. The laggards are not only missing out on these opportunities, but are also putting us all at greater risk. That's all for this taster video on the Accountant's Guide to Climate Change. You can see the whole video covering all of the climate impacts on business and organisations on the course at www.simpliv.com. The whole course is over an hour long. Thank you for listening. I hope this will whet your appetite to explore more on the issue of climate change and how we as accountants can support our organisations to develop new ways of working, to breach the new opportunities and to mitigate the costs. I'm Ross Maynard. Thank you for watching.